Buying a home is exciting, but those monthly payments can feel overwhelming. What if there was a way to pay less each month? It's called a rate buydown, and it could save you thousands. Let's break it down together. What's a rate buydown? A rate buydown is when you pay extra upfront to reduce your mortgage interest rate, which means lower monthly payments. There are two main types, permanent and temporary buydowns. Permanent versus temporary buydowns. A permanent buydown lowers your rate for the entire loan but costs more upfront. This is done using discount points, a form of prepaid interest you pay at closing. 1 point usually costs 1% of the loan amount and lowers the interest rate by about 0.25%. A temporary buydown lowers your rate for the first 1 to 3 years, then it goes back up. This is often paid by the seller or the lender to help buyers afford a home. Example, how much can you save? Let's say you're buying a $1 million home with a 7% interest rate. A 2-1 buydown means your interest rate is reduced for the first 2 years before returning to the full rate. Here's how it works. Year 1, your rate drops from 7% to 5%, so you save about $1,300 a month. Year 2, your rate rises to 6%, so you save about $700 a month. And year 3 on, your rate goes back to 7%, which is your normal rate. So over the course of the first 2 years, you can save over $24,000. But what does it cost? A 2-1 buydown typically requires an upfront payment to cover the difference in interest. This cost is usually 2 to 2.5% of the loan amount. On a $1 million loan, that means $20,000 to $25,000 upfront. But in many cases, the seller or lender pays for it as an incentive to help buyers afford the home. Who pays for this discount? Sometimes you, the buyer, but frequently the seller or lender will cover it as an incentive to close the deal. In a buyer's market, sellers may offer a buydown instead of lowering the price. Is a rate buydown right for you? A rate buydown might be perfect for you if you want lower payments early on, you plan to stay in the home long-term for a permanent buydown, or you expect your income to increase for a temporary buydown. Before deciding, talk to your lender and run the numbers. It has to save you more than it costs. So, whether you're buying or selling, I want to be there for you every step of the way. Let's find the best strategy for you. Reach out for a consultation today.